sweet like a buttercup. You're a Barbie doll. Show them all what I'm made of. Strut down the hall. Won't stop till I get enough.
All right, so let's unpack this day that felt like a financial earthquake, March 4th, 2025. Remember that stock market plunge? We're diving into all the details today with a stack of live CNBC updates. Think real-time reactions from traders, market analysts, even President Trump himself. It's going to be a wild ride.
You know what's really striking is how a political move seemingly triggered this global economic chain reaction, and it all happened in a matter of hours.
It's almost like a financial thriller.
Yeah.
Like, imagine you're on the New York Stock Exchange floor. CNBC paints this picture of sheer panic as the Dow plummets a whopping 517 points. Not a good day for anyone's portfolio.
And the catalyst. Well, President Trump's decision to slap a 25% tariff on imports from Canada and Mexico. Now, tariffs aren't new, but the scale and the targets here, that's what sent shockwaves through the market, especially for companies that are heavily reliant on those trade partners.
Yeah, it's like throwing a wrench into a finely tuned machine. CNBC highlights major players like GM and Ford who rely heavily on trade with Canada and Mexico, and their shares dropped like a rock, over 2% each. And that was just the beginning.
And this wasn't just about punishing Canada and Mexico. It was a signal, a very aggressive one to the global market. And the response, well, it was swift and it was fierce.
Oh yeah, the retaliation was immediate.
Yeah.
China hit back with tariffs of up to 15% on certain U.S. goods, and Mexico. CNBC quotes their president, Claudia Sheinbaum, saying they'd respond with tariffs and other measures. It's like everyone suddenly decided to play hardball.
Canada didn't just sit there either. Prime Minister Justin Trudeau announced a 25% levy on U.S. goods, to which President Trump, according to CNBC, threatened even higher tariffs. So this tit-for-tat escalation created massive uncertainty, and that's what really spooks the markets.
It's like a high-stakes poker game with entire industries as the chips. But this wasn't just about abstract numbers on a screen, right? It was impacting real companies and potentially even the cost of our everyday lives.
Absolutely. CNBC highlights Chipotle. They get a lot of their avocados from Mexico. Their shares slipped too. So this trade war was hitting close to home, literally, potentially impacting the price of your next burrito bowl.
Okay, now that's something everyone can understand. So it's not just about investors losing money on paper. It's about the potential for higher prices on everyday goods.
Exactly. When you disrupt established supply chains and introduce uncertainty, it creates a ripple effect throughout the entire economy. And investors, well, they hate uncertainty. It triggers a classic fear response.
Speaking of fear, CNBC mentions the VIX Wall Street's fear gauge was going through the roof. That tells you just how jittery investors were about the whole situation. It wasn't just about today's losses. It was about the fear that things could get much, much worse.
And they did get worse. For certain sectors, CNBC highlights financials having their worst day since the 2023 banking crisis. Why? Because banks are incredibly sensitive to overall economic health. A trade war signals a potential slowdown, less lending, and that directly impacts their bottom line.
It's like a domino effect, right? One sector falls and others start to wobble. CNBC also pointed out that small-cap stocks, those companies with a smaller market capitalization, and energy companies were getting hit hard too, reflecting this broader pessimism. So how does someone who's not a Wall Street guru even begin to make sense of all this?
That's where understanding the nuances of this trade war becomes crucial. For example, the tech sector, as CNBC pointed out, was a bit of a mixed bag. NVIDIA took a hit, but others, like Alphabet, actually saw gains.
Okay, that's interesting.
Yeah.
Why would some tech companies be doing okay amidst all this chaos? Does that mean some people were actually making money while others were panicking?
It's a reminder that even within a broad market downturn, there are always winners and losers. Some tech companies might benefit from shifts in global supply chains or have less exposure to the specific goods being targeted. It all comes down to understanding the individual companies and their positions within the global trade ecosystem.
So it's like a giant puzzle where every piece is interconnected and you need to figure out how they all fit together.
Precisely. And that's what we'll be exploring further as we delve deeper into the specific sectors affected, the companies that thrived amidst the turmoil, and ultimately what this trade war really means for the average person.
Okay, so we've got tariffs, flying markets tanking, fear in the air. But amidst all this chaos, the tech sector presented this curious mixed bag. As you mentioned, some companies were thriving, while others were getting hammered. How did that even make sense?
Well, CNBC's reporting offers some clues. Remember, NVIDIA, they took a pretty big hit, likely because they rely so heavily on Chinese manufacturing. With all this talk of export restrictions, it makes sense that investors got spooked. It's a vulnerability that a lot of chip makers face.
So it's not just about the tariffs themselves, but the uncertainty of what might come next. Kind of like a domino effect where one trade restriction could trigger a cascade of others.
Exactly. Uncertainty breeds volatility. Investors hate not knowing what's going to happen next. Meanwhile, companies like Alphabet, with their diverse range of products and services, think Google Search, YouTube Cloud Computing. They weren't as affected. Their revenue streams are spread out, so they're not as vulnerable to disruptions in any one particular area.
So diversification is key, especially in a time like this. That makes sense. But isn't there a point where you're spreading yourself too thin? How does someone strike the right balance?
That's a great question, and it really depends on individual circumstances and risk tolerance. There's no one-size-fits-all answer. But in general, having a mix of investments across different sectors and asset classes can help cushion the blow when things get turbulent.
It's like that old saying, don't put all your eggs in one basket, especially when a trade war is brewing. Speaking of which, CNBC also highlighted this fascinating psychological element at play, the so-called Trump bump disappearing. Remember how certain sectors like energy and small-cap stocks surged after the 2024 election?
Right. There was this wave of optimism that a business-friendly president would usher in a new era of economic growth. But by March 2025, that optimism had completely evaporated. The market was essentially saying, show me the money. We need to see real results, not just promises.
So the market was reacting not just to the tariffs themselves, but also to this perceived disconnect between campaign rhetoric and actual policy.
Precisely. The tariffs were a stark reminder that campaign promises don't always translate into predictable economic policy. This gap between expectations and reality further fueled the market's anxieties. It was a loss of faith, not just in the market, but in the system's ability to deliver on its promises.
That makes sense. If you can't trust what you're being told, how can you make informed decisions, especially when it comes to something as important as your finances? It's like the ground is constantly shifting beneath your feet.
Exactly. And remember how CNBC mentioned President Trump's address to Congress that evening? Traders were glued to their screens hoping for some clarity, some sign that this trade war wouldn't spiral out of control. It was high drama for sure.
It's like the whole world was holding its breath, waiting to see what the president would say. Talk about pressure. I can't even imagine what was going through his mind at that moment. It's not just about Wall Street, right? These global events create a ripple effect that extends far beyond the trading floor.
Absolutely. The uncertainty trickles down to businesses, consumers, and even our everyday lives. Think about it. The price of goods, the availability of jobs, the stability of our retirement savings, these are all interconnected in very complex ways.
Okay, let's zoom out for a second. We've been digging into the market fallout, the winners, the losers, and all the complexities of global trade. But what does this trade war really mean for the average person who isn't glued to CNBC all day? What's the takeaway here?
That's the million-dollar question, isn't it? And while we don't have a crystal ball, CNBC's reporting offers some hints. Remember those higher prices we talked about for companies like GM and Chipotle? Well, those costs inevitably get passed down to consumers.
So my burrito bowl habit is going to cost me even more. Guess I'll have to start growing my own avocados. Okay. But seriously, you're saying it's not just about investors losing money on paper. It's about the potential for higher prices on everyday goods.
Exactly. And it's not just about higher prices. Trade wars can also lead to job losses, especially in industries that rely heavily on imports or exports. It creates this chain reaction that's hard to predict.
Okay, things are looking pretty bleak. Is there any good news here? Any potential upside to this whole trade war mess?
That's where things get really interesting. While trade wars are generally seen as negative, they can sometimes force companies and countries to become more innovative and self-reliant. It's a classic case of necessity is the mother of invention.
So you're saying that maybe, just maybe, this trade war could spark some positive changes in the long run, kind of like shaking things up to force people to adapt and find new solutions.
It's certainly a possibility. For example, CNBC mentioned that the USMCA trade agreement was already in place. This trade war might incentivize companies to source more goods domestically within the USMCA region, or even diversify their supply chains beyond the countries involved, making them less vulnerable to future disruptions.
That makes sense. It's like building a more resilient system that can better withstand shocks. But even if there are potential benefits down the road, this whole situation feels incredibly complex and unpredictable. Where do we even go from here?
That's the key question, isn't it? Remember, CNBC's live updates only covered that one chaotic day, March 4th. But this trade war didn't just disappear overnight. It was just the opening salvo in a much larger economic battle with long-term consequences that are still unfolding.
Okay, so we've covered that initial shock of this crazy day, the market fallout, and even glimpsed some potential long-term ripples. But after diving into all these CNBC updates, What's the key takeaway for someone trying to make sense of it all?
Well, CNBC's coverage, even though it focuses on a single day, it provides a framework for thinking about global trade and its impact. It highlights how interconnected everything is and how quickly things can change in our globalized world.
Okay, I'm all ears.
Yeah.
Give me the Trade Wars 101 crash course based on what we've learned.
Okay, first, they're rarely straightforward. What seems like a targeted action, like imposing tariffs on certain goods, can have a ripple effect throughout various sectors and even global politics. It's like a chain reaction where one move triggers a series of unintended consequences.
Yeah, like a butterfly effect, right?
Yeah.
One flap of a wing and suddenly you've got a hurricane on the other side of the world. Except in this case, it's a tariff and the hurricane is a global trade war.
Exactly. Second information is power. CNBC's minute-by-minute updates show how quickly things can change in the market. Staying informed, even if it's just skimming headlines, helps you adapt and maybe even spot opportunities amidst the chaos.
I'm sensing a but coming.
But, and this is crucial, don't panic. Knee-jerk reactions, especially when it comes to investing, are rarely a good idea. This one day was undeniably chaotic. But long-term trends matter more than short-term fluctuations. It's about keeping a cool head and not letting fear dictate your decisions.
That's really solid advice. Not just for investing, but for life in general, right? Don't let the fear take over. So what's the advice for someone listening who's maybe freaking out a little about their portfolio after hearing all this? Should they be running for the hills?
Take a breath. Revisit your investment strategy. Does it still align with your goals given this new global landscape? Maybe it's time to diversify further, or maybe not. The key is to be intentional and strategic rather than reacting emotionally to every market swing.
That's a good reminder for anyone who feels like they're constantly chasing the latest headlines. Sometimes the best thing you can do is nothing at all, or at least nothing rash.
Exactly. And this leads to the final thought. I want to leave you with CNBC focused on the immediate fallout of this trade war, but the real story is the long game. These tariffs are just a symptom of larger forces at play.
Ooh, I love when you get all philosophical. Elaborate, please. What are these larger forces that are driving this global economic drama?
Think about it. These tariffs, these trade wars, they're a reflection of rising nationalism, increasing competition for resources, and maybe even a reordering of global power. The world is changing. And these economic tensions are just one way that those changes are manifesting.
So it's not just about the price of avocados, it's about who controls the avocado supply chain, and maybe even who sets the rules of international trade in the future. It's about which countries hold the economic power and how that power shifts over time.
Exactly. And that, my friend, is something worth paying attention to. Long after the headlines about this one chaotic day have faded, it's about understanding the forces that are shaping our world and how they might impact our lives in the years to come.
Well, that's a thought-provoking note to end on. It seems like this trade war was just the tip of the iceberg, a glimpse into a much larger and more complex story that's still unfolding. Thanks for guiding us through this deep dive. It's been enlightening, to say the least.
It's been my pleasure. And remember, the best way to navigate a complex world is to stay informed, stay curious, and never stop learning.
Sound the alarm. I'm coming up. We'll have a ball. I'm sweet like a buttercup. You're a Barbie doll. Show them all what I'm made of. Strut down the hall. Won't stop till